spent a little bit more than 20 years in the internet space doing a variety of startups across the space, including along the way being involved in 4 IPOs back in that phase of the economy. And along the way, we've gathered a lot of experience around startups and scaling, but most relevant to what's happening in blockchain, we were involved when the internet was first being introduced to mainstream society and was going through its first mass market adoption and commercialization. And we did a lot of work both on the technology side, where, for example, I was involved in helping create the first anti-denial of service attack standard, but also working on a lot of the regulatory and legislative issues that came up, including protecting online anonymity and privacy, fighting spam, helping with the internet tax moratorium, net neutrality, and other items like that helped grow the network that we have today. And so similarly, when we came over into what was then the Bitcoin and now the blockchain space about, 3.5, almost 4 years ago now, what we tried to do was take that experience of what we saw in the early internet and say, where do we see that there are barriers to commercialization or mass market adoption for blockchain? And one of those big areas that came up, whether you're building blockchain applications or getting ready to do an ICO, has to do with risk compliance and how identity relates to that. And I think one of the things some of the folks that have worked on the ICOs will tell you is that actually dealing with the heightening risk and compliance requirements is its own project that's almost a side of the ICO itself. So, we work with a number of large industries and agencies in addition to the work that we're doing in the startup space, and have been advising both companies as well as regulators on thoughts around best practices. So, some of our view of the market, obviously blockchain is going to be huge and transformational, right? None of us would be here if we didn't believe that, and we wouldn't have started a company in the space if we didn't believe that. From Brock's definition of billionaires, that's why we did it, was to change billions of people's lives. Regulated organizations and more of us that are becoming regulated are struggling with the risk and compliance requirements to take on this new technology. And dealing with client onboarding is slow and expensive. This is what it costs on the banking side to deal with compliance, just to know where we're going someday. But what's that mean for the blockchain side? A lot of people say that crypto isn't regulated, and I would highly agree with that. Certainly protocols are not something that get regulated, but more and more the applications that run on top of them are. And there's a lot of people that are hoping to play for a while in a gray area, and that's certainly a strategy that many startups take in many facets of building out a business, is kind of pushing into new areas and breaking ground there. And from that perspective, with some of the things that have come out with the SEC and other things, people are trying to rush to get things done in advance of when that regulation occurs. And there's as many people on this stage have spoken about earlier, from the people running ICOs to the people that are sitting on the regulatory or compliance panels, there's not like an easy one-stop shop on where to go to deal with these issues, and that causes a lot of challenges. Like, just in the United States, you could be regulated by over 50 different agencies for the different work that you're doing. So, kind of what's happening in regulation, right? I mean, in the last couple of weeks, we've seen China ban crypto exchanges. They've literally taken everybody that's operating on the mainland and shut them out and said, go away, go somewhere else. And those companies are trying to relocate now. And if you look at what happened in that ecosystem, in a lot of cases, those exchanges resisted self-regulating and putting their own best practices in place, saying we're going to wait to see what the regulator is going to do before we act. And what the regulator ended up doing was closing them down. And so, for the rest of you, I would encourage everybody to think about what best practices are and what they should be doing in advance of regulation to prevent this kind of outcome. US regulators literally got Interpol to arrest the CEO of BTCE when he went on vacation in Greece. So BTCE was an exchange that was operating overseas out of US jurisdiction. The US Treasury Department claimed jurisdiction based on anti-money laundering laws and said the reason that we're both fining the exchange but arresting people associated with it is they said, well, yeah, you had American customers, and because you had any American customers, that put you inside our jurisdiction. Some other people who were not those American customers were involved in money laundering, and they busted them for that. And so, this was a company that didn't operate in the US. The people that were working in it were not in the US. But US regulators and law enforcement were able to extend their arm across the globe and claim jurisdiction. Sorry about this. This is a little bit of a bummer, some of this stuff, but it's important to think about in advance. The EU just in the last 48 hours, I think it was September 21st, so maybe not quite the last 24 hours or 48 hours, announced intent to increase penalties around cryptocurrency-related crimes with money laundering, terrorism financing, or other things. And globally, regulators that have not been paying attention to cryptocurrency over the last 4, 5, 6 years, they're finally catching up. Right? Singapore has announced an intent to regulate the market. India has come out with preliminary regulations. The Philippines have come out with preliminary regulations. South Korea has come out with preliminary regulations. Japan actually went the route of doing self-regulation and building a self-regulatory organization for the cryptocurrency industry. And that actually, they were able to go to the government, and the government said, yeah, use your own rules. We don't have to make rules for you. So that's maybe another path that people can take. So how about with ICOs? So China, again, they shut down the ICO market. And one of the things that's a kind of interesting cautionary tale around that and around trying to rush ahead of regulators, the Chinese regulators actually made the ICOs give the money back. And so literally, if you raised money in a Chinese ICO and you raised $100 million and you spent $5 million of it, you had to somehow figure out how you were going to give $100 million back. So that's not a world that I would personally want to be in. It sounds like it would be potentially pretty painful. And I know that those payments back have already been happening. The SEC has issued warnings to ICOs saying, look, some ICOs may be a security, some ICOs may not be a security. And while we are saying that we're not going to prosecute the people that did the DAO, that doesn't mean that we're not going to prosecute other people retroactively. So don't think just because we didn't do anything yet that you're out of the water. So you want to follow best practices around what they're doing. Singapore, Japan, the EU have all said that they intend to regulate around ICOs and do enforcement around ICOs. But finally, where are some places where you can get some help? So Coin Center, which is an agency based out of the US, an industry group, has done some good writing around what best practices are for your ICO and how you can keep yourself out of trouble. Pillsbury, which I think is one of the firms that a number of people have mentioned up here today. I know Marco Santori from there, one of the lead partners from there, has done some really good blog posts about best practices in ICOs and how to protect yourself. Similarly, I think that Trevor was just speaking about Perkins Coie. Joe Cutler and Dax Hansen from Perkins Coie have also done excellent work writing about some best practices and ways to go about it. And so in addition to talking to your own counsel about what you should be doing to protect yourselves, I'd encourage you to read up on what these guys are saying. They're really at the forefront and pushing the state of the art of where the legal policy is in these areas. So, what does that mean, right? So from a digital identity perspective, there's a few places where it's required for almost any blockchain event or for ICOs. It's when you're doing onboarding, you need to know who your customer is and where your funds come from. You need to deal with it at funds transfer time, at the time of the transaction. Frequently, there's requirements for the service providers on both sides to know their customer and their counterparty for things like anti-terrorism financing and anti-money laundering. But some things that I think that are important when you're looking at ways to solve these problems are the solutions that you're using should, as many others have talked about today, be open source and open standards based. You shouldn't be looking at solutions that lock you into some proprietary solution for the long term, or we end up in the same solution we were at in the banking world. And privacy has got to sit at the core of any identity-based solution or identity system, where you are sharing the bare minimum of data with the bare minimum of participants in a way that doesn't allow for correlation. So, we kind of came in and we approached this problem. So as I talked about, what we tried to do at Netki was say, where do we see that there's barriers that the whole industry is going to face, and how can we help solve that in a way that meets the entire industry? And so we had a couple different things that we've developed. The first is a series of SDKs and other tools to assist in the onboarding process and automate that I'll show you in a second. And then the second is an open source protocol for Bitcoin and for other blockchains to allow users to privately and confidentially share their identity data with their counterparty, but with nobody else. So from an onboarding perspective, we needed to make sure that we provided something that could meet kind of banking KYC quality, but still provided a smooth and easy digital experience that a normal user would find straightforward. So this is what we did. What we ended up doing was building a mobile SDK that people build into their own app and build into their own branding. So typically, this is something that someone will drag and drop into their own application. And so it becomes a part of what they're doing, part of their own onboarding flow. And this is one that we did for a company called Bit, which is a wallet and exchange based in the Caribbean, where we're actually working with them and working with the central banks in the region to actually issue digital fiat directly onto the blockchain. Is this... All right, well, the service works better than the video, so I'll just talk you through it, and we'll skip the video entirely. We're good with that. So, because it's going to take me less time to explain than get this working. So all we do is, we have the user take out their mobile phone, they take out their driver's license or passport, they take a photo of the front of the ID, the back of the ID, they take a selfie, and then behind the scenes, we do all of the things that you need to do to take someone through a full KYC and validation check. The first thing that we're doing is we're taking those high-quality images, where we've actually taken direct control of the camera hardware at the OS level to improve the quality of the photos and to reduce the opportunities for fraud. From that point, we take those high-quality images, we pass them back to a machine learning algorithm that looks for the security features on the ID, the holograms, the microtext, the other pieces like that. At that point, it looks at every single pixel on the ID, all 10 or 15 megapixels of it, to ensure that there's no tamper evidence around the photo or around the data areas of the ID. At that point, we OCR the text off the front, read the barcode off the back, compare the two for data consistency. At that point, do a facial recognition match between the selfie and the ID. By the way, one of the advantages of taking direct control of the camera hardware is being able to do depth detection on the face at the time that you're taking that photo to ensure someone isn't like holding a photo in front of their face or doing something weird like that. So all of those things, all those like first 5 steps that we did are all based on what you could just see on the ID. From there, we validate with back-end data sources like the Passport Office or the DMV. We can hand it off to your compliance officer for final review if that's a step that you choose. Or we can build in other steps like validating social security numbers, address, SMS numbers, or other things like that. And then finally, once that identity has been validated, if you're in a payments or other use case, we designed the BIP75 protocol that allows someone to take that digital identity token and privately exchange it with the person they're transacting with in advance of the transaction. So what that would look like in this case if Bob wanted to send money to Alice, the first thing that Bob would do is he would open a request to Alice and he would say, hey, Alice, or hey, whoever, I want to transact with you, and sign it with his ID token. Right? So Alice knows who Bob is, says Bob is okay to transact with, and at that point she passes back her payment details, like her address or other information, and signs that with her ID token. So now Bob knows who she is and knows where to pay. Importantly, because Bob didn't have the address until after Alice was able to check him out, Bob wasn't able to make a payment until all those checks were complete. Similarly, now Alice has passed back her information to Bob. Bob can check her out before signing the final payment to the blockchain and then passing a receipt between the counterparties to make sure everybody has all of the metadata around the transaction. So those are 2 pieces of a solution that we pulled together. in order to provide kind of total compliance around blockchain solutions. And I think that this is something that's been important because we've been the only company that's really been focused on blockchain identity and solving the problems for the blockchain universe for the last 3.5 years. So we'll be around to talk more or answer any questions, but I'm going to give the stage back. Awesome. Thanks, man.
Thanks.